All right. Hello, everyone. My name is William Mucker. I am a client executive with Camaplan, and I would like to thank you all for joining us for today's webinar, Why Resorts Are a Great Place to Invest with Amit Gaglani of Accountable Equity. I'd also like to thank you for joining us today, Amit. As a quick note, please be aware that Amit will be answering questions at the end of the presentation. However, feel free to use the Q&A function on your screen, not the chat, to pose your questions whenever they cross your mind. They will be saved and addressed once the presentation portion ends and the Q&A portion begins. Before we get started, we have a brief disclosure to go through. Everything presented in today's webinar is strictly for educational purposes. Camaplan is a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time where you need advice in any of those fields, we highly recommend you consult with your team of professionals. We are more than happy to be a part of that dialogue with your team of professionals to make sure the investment process is quick and seamless. We do not sell any investments at Camaplan, nor do we endorse any products. We will never call you about the next best investment opportunity. We believe that you should always do your own due diligence before investing your money, whether it be your retirement funds or otherwise. Once you have found that investment that is right for you, we will help you open your account, fund that account, and facilitate the transaction into that investment. Here is my contact information. If you or anyone that you know who you believe can benefit from the information have any questions about what is discussed in the presentation today and how it applies to self-direction, please do not hesitate to contact me. I would be more than happy to help. And without further ado, I'll pass the controls over to you, Amit.
Thanks, William. Incidentally, I actually have my self-directed IRA with you guys as well, so I'm happy to be able to talk to everyone. All right, let me do the share screen. And let's see, here we go. Well, hello, everyone. I'm going to be talking today about why resorts are a great place to invest. And I think some of you may be surprised by a couple things. What we actually refer to as a resort may not be what you're envisioning as a resort. And we're going to go over how we've kind of bulletproofed ourselves in these times. So it'll be interesting. If you don't know about accountable equity, you'll get to learn about what we do and how we do things, and why we're a little bit different. Once again, my name is Amit Gaglani, and I'm the head of growth here at Accountable Equity. We're going to be talking about different dialogues, and we're going to go through some slides. Balance, there's Peter Schiff and there's Jeremy Siegel, and we'll kind of go into what their views are and who they are. We'll talk about all the conferences that we go to in the country and all the lodging conferences and all the information that we're gathering to kind of, know and stay on top of everything. And we'll tell you how we're kind of hedging ourselves with everything that's kind of going on. So Peter Schiff, for those of you who don't know who Peter Schiff is, he's a very famous stockbroker. And here he's kind of known for some gloom and doom where he's telling that things are going to crash and it's going to be worse than 2008. So you have one person on that side of the field, and then you got Jeremy Siegel. Now, for those of you who don't know Jeremy Siegel, he's a well-known economist, and he's actually handles the business school of finance at Wharton. So, he's very well known, and he's on the other side saying, yeah, we know things are going to be happening, but it's a great opportunity to overcome inflation by investing in stocks now. So you have a little bit of a dichotomy. They both see that things are going to be changing. I mean, everybody sees that, recession is coming. It's, we just don't know what the impact is. But you have some people who say go and hide. And then you got other people like Jeremy Schiff who says these are opportunities, kind of like Warren Buffett. Buy when others are selling and sell when others are buying, kind of philosophy. This is Josh McCallan. Now, Josh McCallan is our owner and CEO. For those that you don't know about us at Accountable Equity, Josh and his wife, Melanie, started the company several years back, and they have quite a long history in hospitality. Now, he attends a lot of the conferences. I go to some of the conferences, but he goes definitely to the lodging ones because that's his expertise in hospitality. And he knows all the players, and he knows what all the big resorts and big Marriott chains and all the different chains are doing and what they see and foresee coming, as well as all the new things that are going to be coming down the pike. So, it's great to have your fingers on the pulse of what's going on throughout the country in your own industry. But it's also very important to know how you stand differently than everybody else. And we absolutely do that whenever we go to these conferences. We get a lot of attention because of the way we do things, which we're going to definitely dig into. So here's a little bit about Josh. I'm not going to read this whole thing, but basically for 23 years, he's been in hospitality. He's done some great operational things. He's ran some great resorts, which I'm going to show you on the next slide. And he's won some, very big accolades. So he knows hospitality. He knows the ins and outs of hospitality. He knows, room rates. He knows how to run a resort, some very large resorts, and how to make them highly profitable. This gentleman, John Chang, he is of Marcus and Millichip. Now, Marcus and Millichip they are one of the largest brokers that handles commercial real estate. So they'll go on many different radio stations, on many different TV stations, and they'll give their opinions on what they see happening, because they have a broad spectrum of information that they gather. Now, they say, and we all know, the Fed is very clear. They seek to have manageable recession. It's not a question of whether recession is coming. It's about how can they manage it without, hurting the economy too much. They want to bring down inflation, but they want to have a nice soft landing. They don't want to have a very hard landing. So we all see that the rates are kind of going up, but they want to make it so it's manageable. What John Chang sees, though, in the commercial real estate world is the sellers of properties and the buyers of properties. There's a gap from what the sellers think they should get and what the buyers are willing to pay. So the sellers need to be motivated and realistic. They still think it was 6 months to a year ago when prices were very high. So that realization is still coming. And when it does come, there's going to be diamonds out there for us to pick. And what that means is, when that gap starts to close very soon, there's going to be a lot of opportunities to buy, and to buy at a heavy discount. David Green, for anybody who follows Bigger Pockets, which is the #1 real estate podcast in the country. David Green is very well known for his understanding of residential real estate as well as commercial real estate. And he kind of put this slide together to tell you about commercial real estate. And as he says, commercial real estate is great as it puts forced appreciation in the hands of the investor. So there's different types of appreciation and different types of ways that properties, real estate properties, commercial real estate properties, and in our case, resorts, kind of increase in value almost naturally, okay? Forced equity, we hear that term a lot in multifamily. Forced equity is when you're doing value adds to the property. You're redoing a kitchen, you're adding washers and dryers. Well, all of a sudden now you can charge more. So you're forcing the equity onto the property, therefore you're increasing the value. Now, in our hotel segment, in our resorts, which we're going to go into how our resorts are a little bit different, we have a lot of things that we are doing that we're building up in the resorts. We are redoing rooms, we are redoing ballroom spaces, we're redoing everything. That forces the appreciation as well. The other thing is market appreciation. The markets will generally go up, and that kind of leads to #3, the natural equity of things, inflation. Inflation will actually cause the value of your properties to go up. Now, there's certain areas of the country that will go up more than others, but it will actually go up. And then there's buying opportunities out there. Buying equity, we own the real estate. We own these hard physical assets that have value to them. So that's not, that's not to be taken lightly. When you own real estate, it will go up in value as the years go by. So we own that land. We have tremendous amounts of cash flow on our properties. And to give a little bit of an idea what type of resorts we're talking about, the one behind me that you see is one of our signature properties, Renault. Renault, it has a winery, so it has vineyards, it has a golf course, it has a hotel, and it also has many different restaurants in it. So those are the kind of properties that we have. We are redevelopers and revitalizers of old historic properties. We've done it here at Renault in New Jersey. We've done it in Kent Manor, which is outside of Washington, D.C., some historic, beautiful properties. And we're doing it right now at LBI National, which we just purchased not too long ago. These properties we are buying at deep discounts, and then we're revitalizing them. And our main triggers that we're going to go into, our main income sources, is not what you think when you think of a resort. Typically, when you think of a resort, you're thinking of someone going to a resort because it happens to be at a destination that you want to go to. It has to happen to be by the beach. You want to go to the beach, You want to choose the best resort for yourself. So that's why you're going there. You're not typically going for the resort itself. You're going actually because you want to go to the beach. Ours are very different, and that's why we have a lot of control in ours. And we're going to go into that in more detail. Here's why the media absolutely loves us, okay? Because of what I was just about to say, what we're able to do on our properties. The main reason people come to our properties is, and we have control over, is we have events at these properties. We do tons and tons of wedding sales. We do 6 to 13 weddings on just one property on one weekend in a month. So that's, if you multiply that times the year, we're doing quite a bit. We probably do more weddings than anyone on the East Coast. That's how many we do. And that's at one facility at Renault. That doesn't even go on to talk about the one in Maryland or the new one that we just purchased. It's what we're good at. We have event spaces that we do outdoor events. Here's a perfect example of how some things just pivot. And I will explain this again because it's noteworthy. During the COVID, you can't do weddings, right? And if our whole business plan is based on weddings, what do you do? Well, this is why one of the reasons a good team is important. The team decided to do outdoor events. So what do we mean by outdoor events? Outdoor concerts. We had a ice skating rink outside. We had a French market outside. We actually did tons and tons of outdoor events and fireplaces and had a beer garden. Atlantic City was shut down, but all the people from Atlantic City, including the executives, were showing up at our resort, which you could see on the left over here. It's incidentally, that one resort, Renault, is one of the oldest in the country, and it is the only one in the country that's allowed to make champagne. Louis Renault came over in 1855 from France, and he decided that the soil was perfect here at Renault. And, he set that to be his home. And now we are still making champagne, and we're the only ones in the country that can do that. On the right, here we have our LBI National. There we have a wedding space as well as a golf course. It's a beautiful golf course. And, we have hotel space there as well. So we are attracting the crowd to come to us, which is very different than what you may be used to. Once again, this is what the media writes about us all the time, about, the wonderful things that we're doing at our properties that actually attract, customers to us. Vintner Wonderland was a huge success. That's when we put up the ice skating rink on one of our properties. It was so successful that we're deciding to do this on many other properties because we are literally drawing crowds to us, which is very different than what you might be used to as a regular resort. We are drive to destination. That means people literally come to us for whatever we're doing on property. So that in business is something that we can control. If you are a destination place that's based on, a beach or a locale, then people are only going there for the beach, and off seasons they're not going there. For us, year round, we have people coming to us because we have tons of weddings that are going on, and when people attend a wedding, they want to do a lot of other things. And when we have outdoor events, it draws them to us. Here's a great quote from Steve Jobs, and he's quoting Wayne Gretzky, and he writes, or he says, Wayne Gretzky says, "I skate to where the puck is going to be, not where it has been." So if you think about this, this is exactly what we're doing. And this is why we're popular when we go to these national seminars and things like that, because we are actually listening to the marketplace and delivering what they want. Some of the resorts that you're used to, like the beach resorts, they have to cater to who comes to them. And that's going to be based on temperature, climate, a whole bunch of different factors, seasonality, different things going on, but we are actually controlling it. So we are actually going to the puck because we know where that's going to be, because we are sold out for weddings 2 years in advance. We already know that we have this much money coming in the books. It's already contracted. It's already coming in. It's not if we're going to get it. We already have it contracted, and we already have large deposits on it. So, which actually we're going to delve into, well, what does the wedding business look like, and how profitable, or why is it a good business? But this quote actually kind of explains what we're doing. We are going to where the puck is going, not where the puck has been. So I like to use the Renault one in New Jersey just because it's our signature property. It's been there for a while, and I have great pictures of it. That's one of the other reasons. Okay, so here we have the back of the property. We have all these things, and all the little circles that you see are additional revenue sources that occur on any given property. Now, what is fabulous about this? People come here because, let's say, they're coming here for a wedding. But when people come for a wedding, the bridal party and the bachelor party, they want to do things here. So either they're going to do wine tasting, which is an added fee that we can control. These are levers, or what I like to call levers, that are on the property. And what I mean by levers is these are additional revenue sources that, you know, add into our income for the property. They want to go on a golf round. Well, there's a cost for playing golf. There's a cost for our wine tasting. There's a cost related to our wine programs that we have. You know, we have wine tours. We have you know, wine clubs that we can be a part of. Chateau Renaud is our hotel that's over there. Well, we have a petite market, we have a bistro Renaud, we have these additional restaurants that are on our property. As you can see, the garden itself over here on the left-hand side, this is an outdoor garden that we made, and you could see some of the winery and some of the vineyard right there. But you could see the beer garden that we actually made, and then Taste, that's a separate restaurant. But these are all added things. You see fire pits out there. There's what you can't see right here behind the trees are these little huts that are like cabins that people pay a lot of money on a weekend to sit in their own private hut to be able to watch an outdoor event, a concert or something. People pay to have a fire pit. You know, there's lots of fire pits over here. This whole area that you see down here is a village. You know, these are all added revenue streams. Park Renaud is a whole separate area. So having these properties gives us a lot of sources of income. In a changing dynamic market, you need to be, and you want to be as a business owner, nimble. And we are very nimble because we can control room rates. We can control, you know, the cost of golf. We can control the cost of these things to kind of flex ourselves with the economic changes that we see kind of happening. Now, there's other changes that we need to be cognizant of on the operations side, which I'd like to go and tell you the strength of it. One of the things that we are focused on is investing in our leadership team. Now, myself, I'm an investor here, and I was one of the early investors in Renaud. Then when we opened up Kent Manor, I was an investor there. Then when we did LBI, I was an investor there. I have joined the team because I continued to bring other investors here because I loved what these guys were doing. So I'm also an investor looking out for investors, and we have actually really formed a good, strong team, and the team is mostly comprised of investors leading other investors. And the reason that you want to invest in your leadership team is there's changing markets that always happen. And for anybody that's invested in syndications, you've probably heard the term, invest in the jockey, not the horse. Okay. In this case, the investment is the horse. The jockey is the leadership team. The leadership team has to be able to be flexible and has to be able to understand that there's different things that will happen that we don't have any control over, like when COVID happened and the leadership team was able to pivot and was able to put in a whole new plan. By the way, that whole new plan of doing the outdoor market and doing the ice skating rink and that everything that we saw in that picture, the numbers that the profit that they made from that beat the expectations if they actually did the weddings. So we beat the pro forma that was based on weddings, even though we didn't do any weddings. We actually doubled it. That's how popular our outdoor events were. Now, yes, they were super popular during COVID, but they have not died down because people are looking for things to do outside and they love outdoor concerts. When the fall gets there, they love having apple cider out there. They love going ice skating. They love having a French market. They love having, you know, fire pits out there. In the wintertime, we have a festival that's going on because of everything that's there. It's a very festive and a bright area. Plus, we've capitalized on understanding how to market it by now as well. So the leadership team is very important. So we always say the jockey, not the horse. So here is the leadership team. We have Josh McCallan and his wife, Melanie. Now, as I said, they come from hospitality. They've seen resorts and have helped at resorts and worked in resorts in Europe and then over here, and they've won some great accolades. You have Scott Bindas, who is our Vice President of Investor Relations, and he was one of our first investors at Renaud. Then Michael, myself, and Getan are also early investors, now have joined the team, and we all help our fellow investors and forming the structures of the funds and the properties that we look at. We all work together collaboratively to look out for our investor community. Additionally, we have hired some great people. Chef Joe Laporta just came to us from a very, very large venue, and he's an executive chef. So he looks out and he manages the chefs at the other resorts as well. Actually, he's so particular that when a truck comes full of food, he actually goes to greet the food to make sure we're getting exactly what we're supposed to. And I'm going to go into some detail about that in a minute too, on the how we are looking after the business aspects of everything, including catering and everything coming into this recession. Sheila Brown, a VP of Finance, Matt Steck, him as well as Jeff understand construction. Noelle is an architect, but she is part of the team that actually makes the resorts look what they look like right now and all the innovations that we have on it. Milani is running the wedding sales and the events, and they are literally killing it. They are literally have it down to a science, and they know how to book them. Like I said, at Renault, we're booked for 2 years, and they're going to be also doing the wedding sales at our sister property, which is right down the road, which is LBI National. So, we're very excited about having a good leadership team, because it's going to help us through these tough times, as well as, navigate, what we want to do in the future. And we see tremendous opportunity everywhere. So now if we kind of dig in and understand the room rates, hotels have room rates, and we all know from going to hotels that you might check a room, on a Tuesday, and it's one price, and then you check it a couple days later and you're like, wait a second, it just changed already. There's dynamic pricing that happens. So what are the important things of this? Now, the first graph that you see here is a national standard. Okay, so this is the national standard. And what's interesting is if you see the occupancy rates, now these are standard hotels. These are hotels that are not like us, that are, driven by wedding sales or things like that. The hotel exists to service anybody that needs to stop in. Okay, so they don't really draw the public. They just they're more reactionary. We are more the cause, they are more the effect. And I say we are the cause of everything is because we have the weddings that go on, we have the events, and that causes people to come to us. So we have the ability to kind of pull, more marketing to get more people to come to us, or less marketing to get less people to come to us. So we have that control, whereas the standard industry, they just get what they get. So they are the effect. Okay. The standard is occupancy is this column right here. So you can see in 2022, the standard is 63. Now look at our standard. You're down here. By the end of this year, we're at 55. So you'll say, wait a second, that's not great. Well, it is. It's actually very good, because our pro forma was only based on 47% occupancy. Now, remember, when you have events, majority of the events happen on the weekend. During the week, it's a little bit more quiet. You might have corporate events and things like that, but our room rates are not filled during the middle of the week as they are on the weekends. But our pro forma that we only needed was about 47%. So we are actually way above what we were targeting. And so it looks great for our pro forma as well. ADR, average daily rate. This is the industry standard for the average rate. As you can see, $145 a room per night is the average. Where are we at? By the end of this year, we should have 228. This is on par for what we were at. So you can see we're well above it, because remember, people are coming to us because they have a wedding going on and the parties need a place to stay. RevPAR. This is taking the room rate and dividing it up by the number of days in the year. So you get an average rate. Because the room rates fluctuate with seasonality, with times of the day, even when you're booking it, and the times of the year, the RevPAR is an interesting number because it just averages everything out. Now you can look, $92 is RevPAR. Look at ours here, 127. So we're above that. And we control this once again. So we're above the national standards. That's why we're so popular when we go to these events and other people look at us and they say, how are you able to keep these numbers? It's because we have the controls in place. So when Josh was running different resorts, here's a little bit of a case study of the resorts that he ran. He ran this resort in New Jersey. At the time they bought it, and this is in 2012, they bought it for $8 million. It was appraised in 2018 for $37 million. It's probably close to $50 million now, okay, at the time. And you can see so on and so forth. He's built up every single hotel that he stayed at. And these three actually won a lot of awards through TripAdvisor. Then in 2018, we purchased Renault based on his success. And all the people that are invested believe in his ability to navigate and his ability to do this, because he's done it again and again and again in the past. In 2018, we bought it for $5 million. It just appraised. Estimated value of 2026 is going to be 75 million. And how does that done? Because of the things that we said, all the revenue streams that we have, and how we were able to mitigate risk during COVID, and how we might have had a project in 2018, we projected what our revenue would be in 2021, 2022, and we projected it would be 10 million. What we actually hit was 20 million. So if you think about that, we doubled what we were expecting to get in revenue. We doubled it. So, you know, we basically are going to put that same philosophy into every single property that we do. We bought Kent Manor in 2020 for 5 million. And now it's estimated, it'll be estimated at 37.5. So how are they coming up with these estimations? Basing on how they see the room rates, how they see the wedding sales and everything. These are the estimates that we are given from banks. LBI National, we just bought it, and we bought it at $7 million. It's already going to be estimated at 30.9. Interesting story. I was there the day that we gave a tour of LBI National. We didn't even own the property yet. And they were going to start selling memberships for the golf course. We buy these properties at heavy discounted prices. Some are because unfortunate circumstance, either somebody passes away in the family and nobody has any idea what to do with the resort, and we get it for a heavily discounted price, or we get them through bankruptcy and we're getting them at heavy discounted price. Once again, we're always buying these properties at heavily discounted rates. So we put ourselves in a great equity position from day one. And that's what happened at LBI National. This property had been sitting around for 2 years and nobody was golfing on it. Yet the golf staff was still taking care of the property. And the community around it literally bought their houses here in this community just so they could golf there. So for 2 years, they weren't able to golf. When we opened it back up again, we said we wanted to do a membership philosophy because we wanted the people in the community to be able to get the tee times they wanted, because that was something that was, you know, they weren't so happy about. They couldn't get the tee times they wanted, but doing a semi-private club where you can have public people come in, but you can have the membership have the tee times they want, allows them to be happy too. So on that day, we sold memberships. And like I said, we hadn't even closed on the property. Dollars in hand, $1.4 million in golf memberships, and we hadn't even finished purchasing the property yet. So that's how much we walked in with. We walked in with that. Another true testament to how we are actually acquiring these properties at deep discounts and then be able to add value right away. Wedding sales. These are some interesting things that, you know, people who are not in the wedding industry don't even realize, like where New Jersey is. New Jersey ranks #1 out of the 51 states in average wedding costs. So believe it or not, if you're doing a wedding in this part of the country, you're spending a lot more than everywhere else. New Jersey ranks 14 out of the 51 states in number of weddings that are going on. So let's take a look at that. You know, back in 2018, when we got started, there would be 47,000 weddings. Now, 55,000 weddings, okay? The average spend back then was around $36,000. Now it's $44,000. Total sales have gone up. These are what the expectations are, and these are just literally the current statistics of what is happening. Anybody having a wedding, this is what they expect. They expect to be paying those prices. Weddings are our bread and butter, and weddings remain strong in this type of climate. And people ask that question all the time. Well, how's it going to do? Well, I can tell you this. In the last couple of weeks, we've sold more weddings than we have ever in the past. Our wedding sales are very strong. And this is a picture of our Renault property where you could see the vineyard right over here. Beautiful pics. So like I said, it's the bread and butter. And here's an article that says, you know, what are people who are planning on getting married, what should they expect? It goes over in this article that people should expect to pay more. The cost of food has gotten more. I know when I go grocery shopping, I realize how much more it costs. Well, it costs us on the catering end too. You know, food waste is something that we're very, very understanding, and we know that we have to be very good, and we're putting technology in place, and we're putting great people in place to make sure that food waste is minimized as much as possible. And that increases our margins too. Here's Josh in 2018 giving a presentation about Renault to future investors. And he says that, hey, you know what? we had 795 leads last year, and that property was going bankrupt at the time, and they already had 795 leads. Well, let me just show you what's happening now. In 2021, we had almost 6,000 leads for weddings. So you could see how much of an attraction our property is getting compared to just a few years ago. And these are just wedding leads. Forget about these additional things. These are inbound social or corporate leads that we're getting, around 1,000. We're getting 6,000 leads. And our team is excellent at converting it. I mean, if you look at the pictures and if you look at the website, if anybody goes to accountableequity.com, you'll see the kinds of weddings and things that are going on our properties that just drive people to want to go there. So it's quite beautiful. I was just there last weekend for a learn and grow event that we do for our investors to tell them what's new on property and like what we're doing. We're very avid about our investor community, so we love to have quarterly learn and grows at different events, at different venues that we have. So there's such an untapped market that we're not even looking at. Third-party marketing of unique experiences, corporate retreats, owners, you know, our owners are our best ways, but there's so many things that we have not even really totally explored. And we know that there's a bright future, because now that you have people who are working from home more, what corporations still want people to get together, but when they get together, they don't want to get together in the office. Guess what they want? They want a corporate retreat. So they want to go somewhere. So they'll like go to a vineyard, they'll have a wine tasting event. And we're seeing more and more corporate events actually happening, which are starting to fill our midweeks, which are great for us from a business perspective. And we don't see that changing because most of the industry is saying they probably won't go back full time to, you know, being back in the office. Further, you know, we haven't even really explored the channels of Airbnb and how to attract them to us. These are all, you know, things that we can potentially do to attract everyone to us. And we have not even tapped into those areas yet. Corporate retreats, like we talked about, small businesses, you know, work office zones, you know, Zooms, things like that, that causes people to, you know, stay apart, but you need something to get them back into nature and get them back into, you know, seeing each other face to face. I was mentioning one of the things when it comes to, you know, having a good team is one thing moving into the recessionary period, but cutting waste is another. Couple things of waste. There's waste when it comes to food, and there's waste when it comes to operations. So there are these different things that are waste that we are looking after. We're using technology to make sure that we are minimizing waste. As you can imagine, when you have all these outdoor events and when you have all these weddings and things like that, there's a tremendous amount of food waste. You know, we're ordering food that maybe somebody doesn't come, or maybe we have extra. But Joe Laporta, who's a great chef, understands that the cost of food has significantly gone up, so we cannot be wasteful, and we have to use technology to make sure that we are, you know, plating properly, giving things properly, and choosing the best foods for the price value of everything. So, you know, we're cognizant about that. From the production side, meaning from the operation side, sorry, you know, we're looking at our own staff. We're saying, you know, do we need this many staff at a certain time? You know, is everybody clocking in as opposed to just having hours? You know, do we need that many staff? So as we're moving into a recessionary period, we're also looking at operations to streamline them, to make sure that we are putting ourselves in a good position. The other things that we're doing is asset deleveraging, almost to the point that we're basically saying we want more cash on hand because we see so much opportunity coming up. We have a funnel, and the funnel, you know, starts off big here and comes down here. All these opportunities are coming to us about different resorts, different wineries, different golf courses, and we basically put them through the funnel. We do our due diligence on them to see if it kind of makes sense for us and if it's something that we want to do. So having more cash on hand for us is a very good and strong position to be in. Deleveraging some of our properties to make sure that we have more cash on hand is basically how we see that we can take advantage of the opportunities that are coming. And overall, this is why we feel that resorts, our type of resorts, are a great place to invest because we control that market. And that's the difference between being at cause or being at effect. We aren't the effect. We are the cause because we control how many weddings that we sell. We control the number of events that we do. That causes people to come to us. Those people come to us. They want unique and great experiences. We're able to deliver those unique, great experiences at a price point that they can handle. Therefore, we have tremendous amounts of cash that we're able to generate. So that's why we feel strong about our market positioning. And we feel like there's so many things that we have not even been able to tap into yet, which we will be tapping into. So I think that was the last slide that I have. So if there's any questions, I'd love to be able to answer them. I'll get Will.
Yeah, thanks for the presentation so far. I'm looking forward to the questions coming through. And just to attest to how popular Renault is, my sister actually got married there over the summer.
What a small world. That's
yeah.
great.
And it was beautiful.
I hope you went. Okay.
Yes, I definitely went. I was actually the officiant for the wedding.
Oh, very nice. Okay.
Yeah, beautiful place.
Yeah. Yeah.
Right,
and when was it? In the spring you went?
This past summer.
Okay. Yeah. Beautiful on property.
Yes. And we just got a question coming in from an anonymous attendee. What is your rate of return in the last few years?
So there's IRR returns that are usually projected around 17 to 22%. We probably underwrote that it would be a little bit less, but we blew past it. As I said, in 2018, we kind of projected that we would be at 10 million by now, but we actually hit 22 million or 20 million, if that helps. And then, our funds are a little bit different than what, most people are used to, the way we do our equity things. And, when investors come in and what they're investing in, they invest in a specific property. And in that property, we allow them to have something called perpetual income. So just from a perspective of, what our investors see, it's just they get perpetual returns on it. It doesn't end after we refi and we've given them their pref. So yes, you have to be accredited, and a minimum investment is going to be different for each thing that we have. So we have 3 open funds right now, and each one has a little bit different. We have an equity class investment, which is our LBI National one that I was showing you pictures of. That has a certain minimum. And then we have an efficient income one for certain people who have, tax purposes. That has a different one. And then we have what we call the CDF, which is a collateralized debt fund. That has, I know off the top of my head, that one has a $10,000 minimum. So it's an extremely low minimum, but that one is not based off a pro forma. It's based off a certain percentage that they would definitely get. It's not even questionable. It actually helps the properties, it helps the investors, and it helps, you, the investor, as well. But, if you check out accountableequity.com, you'll see all the things that we're doing and all the funds that we have. And you'll probably get in touch with me there too, so I can even dig into it deeper. Some things that people like to ask me is saying, well, what are you guys doing specifically during this recession that you're getting ready for it? And I've definitely talked about it on this presentation, but overall, we're moving ourselves into a higher cash position because we see a lot of opportunities that are coming down the road. And we like to buy positions that are deeply, deeply discounted because we walk in with tons of equity, which is great for our investors. And we are operators. So, here's another question that people ask. Do you use third parties to do the administration or the hospitality end of it? So we do not. We actually handle it ourselves. Viva May is a company that we own, and Josh and Melanie make sure that they put all their experience to use there. So we control these assets. So we don't just buy the property and have some third-party company, manage it for us. Now, people do that, but for our thing, that's not for our liking because we have a certain way about how we do things, and that's why we are as profitable as we are, because we control the properties themselves. So we manage them. So we are owners and we operate them ourselves. We do not have a sell model. Some people have asked us, well, what is it going to look like when you sell these properties? We don't know because we don't plan on selling them. We're so good at owning and operating them. We plan on just continuing to do that. Now, don't get me wrong. If somebody comes in with $1 billion and offers us something, no one's going to be saying no. So that's kind of how it goes. So cash positioning was one of the things that we're going to be doing during this market cycle. We're going to be looking at our operations, which I went into, saying, we're going to cut costs where we need to. We may not need as much staff depending on what's going on. So these are all the things that we are looking at that we could do. We may not execute as long as the volume stays up, But we also noticed that food costs have definitely increased. And because food costs increase, we are using technology to make sure that we are staying after, food waste, because that's, believe it or not, in catering, that's one of the biggest things that hurts the profit margins. And, Joe Laporta is, very cognizant of that. He actually gave us a talk last week in regards to how to save money on food costs and waste, and how to proper plate and how to do those things. So that was great.
Trying to think of, here comes the question. What kind of tech? Oh, didn't you just answer this? What kind of
So
technology?
I don't know the name of the technology because they were talking about different software that they use and understand for food catering side. I'll be honest, I don't know much about the food catering side, but they kept talking about starting some new technology that they were utilizing. I bet you it has something to do with the way they order. I know that the chef himself was saying that, you'd be surprised that you place an order for food. When it comes, you actually think that you're getting what you ordered, but a lot of times you're not. And that's why he goes to the truck himself and checks, did I get what I ordered? Because a lot of times you don't. So it probably has something to do with ordering it, getting what you ordered and making sure that you're paying for what you're actually ordering. So I'm sure it has something to do with that, but I don't know all the intricacies because he comes from a very, very big operation, and he knew how to streamline those processes. And he was going into details that, I'll be honest, I don't know the catering side of the business, that part of it. So, but it is a good question. But I have other friends that own restaurants and hotels, and they say, food waste is something that's, very harmful to the business end of it, and people don't realize. It's like when a chef orders way more food than they need, and if it's fresh fish, it just has to be thrown out. So I bet you it has something to do with, ordering what you need as opposed to, wasting extra. That would be my assumption based on the conversation that we had. But when you own a business, which I used to own, you're basically looking at all your lines of income to make sure that have you tightened everything up during these times, and are you in a good cash position, moving into different turbulent times. So whether it's recession or whether it's just uncertainty, you want to have enough cash on hand to weather the storm. And obviously you got to make sure your product is good, and we've won so many accolades on our properties, and the news loves us. So they're constantly over at our place talking about us. And like you said, you went to a wedding there, and it's a beautiful place, especially when you're able to golf there and you're able to go for, wine tasting there. I was there for a wine tasting last week, and it was great. They talked about the whole history of Renault, and goes back to 1855. And, for those people who watched the show Boardwalk Empire, some of that, this property was on it. They talk about a character named Nookie Thompson. They talk about Al Capone. Well, there's a room in Renault where Nookie Thompson and Al Capone used to kind of hang out. And this is before the Prohibition time. So it has quite a history. It's actually very interesting to hear about it. Yeah. And that's just the one property. Like I said, I keep talking about Renault, but we have Kent Manor and we have LBI National that are doing very well. And they just got revamped, and we put these new wedding venues in, a large barn style wedding. So yeah, we have weddings under the trees. They light up the trees, they raise the canopy on the trees, and they do weddings underneath it. It's really pretty, these outdoor weddings.
Absolutely. Can you think of any other questions that we should be asking, commonly asked questions?
Yeah, let's see. When it comes to, well, then there's fund specific questions that people ask, but I would encourage them to probably go to our site, the website, to see, what our funds are, and then call me directly or contact me directly to ask about them. But as a company, I don't think it can be overstated enough that our leadership team are investors themselves. We were investors in this before we became leaders of this company, which is important because we all come from different industries in the past. And, we had a liking for what these guys were doing here at Renault. And as they continued to grow, they also realized they need to bring on leaders with different skill sets to keep this growth continuing. So we want to make sure that we're doing a good job for our other investors, because we are investors here as well.
Perfect. So I think that's a good amount of questions. You've answered a lot. Oh, wait, here comes one. Are you going to open up for non-accredited investors in the future?
We don't have any plans of doing that. We've looked at this again and again and again, and I'll be honest with you, we've looked at this so many times, we just come up with the same problems that happen every time. the regulations that are required for non-accredited investors requires us to put more money into all the legal fees and legal aspects. Then it changes the whole dynamics of the returns that we're able to offer to a point that it's almost, sometimes it becomes difficult to be able to offer it because it's not as attractive anymore. So every time we've done it, we've always looked at it and said, we want to open it up for non-accredited, but here's the issues that we're having.
Great answer. Should I give another, what do you think? Should we give another minute or two to more questions, or at the very?
Yeah, well, why don't you tell me this? You went to the wedding there. You've been there on property. Did you do anything while you were there, or did you just strictly go to the wedding?
I to be honest, I showed up a little bit late.
So
I had
wedding.
well, they were there for the weekend. I showed up right before the ceremony, and I had to prepare
Okay.
for the ceremony. But her now husband is went golfing. He's a big golfer. He loved it. He loved the course. The land there is just beautiful. The building's beautiful. The service is great.
Yeah.
Nobody, and the food's great there too.
I'll tell you a little story though. I'll tell you a little story. So before I became an investor, I went down to the property to look at it and kind of kick the tires around, not telling anybody who I was or that I was a potential investor or anything. And people opened the door for me and said, welcome home. And I thought it was very odd that somebody was doing that. As I walked inside and walked through the lobby, somebody else said, welcome home. And then I got to realize this is part of their hospitality that they get trained on. And it's not just one person that's a superstar. This is a weekly training thing that they go through on a whole aspect of hospitality. And that was the secret sauce in my mind, because I ran a company and I owned a company. I know how hard it was to have that culture. So when you say that people are wonderful, it's because they're having these meetings on a weekly basis on, you know what, servant leadership, on like what it takes to be in hospitality and what it takes to make people happy. So yeah, I really noticed that, and I really like that about them. So I definitely noticed it. And yeah, the golf course, well, I've lost a lot of balls in that golf course, but that's a whole other story. Yeah, especially when they go inside a vineyard, I'm like, I don't know where it went. So
yeah, no, it was a great experience. The service really came through. The education in their service definitely came through. No complaints. Again, a very memorable evening, obviously for my sister, of course, especially.
Yeah, it's a great property. And I keep saying that's just one of our properties. And we have others too. We have equity class investments, and we have the collateralized debt fund investment, which is that's a big one too for people. So that's great. Yeah, thanks for the opportunity to talk to everybody and share, why we think that this type of resort investment is such a great opportunity for everybody. Remember, these are different type of resorts. These are the resorts that we have control over, whereas the destination ones where people go away, they don't have control over. They're just the recipients of whatever comes to them. We drive the business to us.
Absolutely. Now, if anybody does think of questions in the future or by watching this recording, where should they go?
Yep. So obviously they can go to our website and they can kind of scan around what they see there at accountableequity.com. It's right on the bottom of the slide. Or they can get in touch with me personally at Gaglani, which is Gaglani at accountableequity.com. That's my personal email address.
I appreciate it. I appreciate the presentation. And if anybody has any questions on how any of this applies to your self-directed IRA or how to use self-direction to invest into resorts, please reach out to us. You can go to our website at camaplan.com or reach me directly via my email, which is my first initial and last name, which are W Mucker, which is M as in Michael, UCKER at camaplan.com. Thank you again, Amit.
Thank you. Take care, everyone.
Take care.